This month, something happened in Jamaica that most people have not heard about yet. Laboratory results from a seabed survey off Jamaica's southern coast have confirmed the presence of thermogenic hydrocarbons, compounds that only form deep underground under heat and pressure. The exploration company behind the survey says there is now an established body of evidence for an active petroleum system offshore Jamaica. The government has confirmed it. This is what we know and what it actually means. In late January 2026, a research vessel called the RV Jaya departed Trinidad and arrived off Jamaica's southern coast to conduct a seabed geochemical exploration survey, an SGE survey over the Walton-Morant license area. The vessel extracted 42 piston core samples from targeted seafloor locations, specifically depressions and pockmarks associated with hydrocarbon seepage from below. Those samples were shipped to TDI Brooks International in the US for laboratory analysis. Results came back days ago. The analysis found thermogenic hydrocarbons in the cores, specifically C4 and C5 compounds, butanes and pentanes. These do not come from surface bacteria or organic matter. They form at depth, under the conditions that generate oil and gas, and their presence in the seabed means they are migrating upward from below. On April 8, 2026, United Oil and Gas formally reported to the London Stock Exchange that the data represents an established body of evidence for an active petroleum system in Jamaica. Energy Minister Darrell Vaz confirmed the findings the following day. This is laboratory-confirmed geochemical data, not rumor, not speculation. An active petroleum system is the foundation that every commercial oil discovery rests on. Here is how it works. Source rock, typically ancient shale, generates hydrocarbons over millions of years under heat and pressure. Those hydrocarbons migrate through the rock until they are trapped in a reservoir structure. That is where oil accumulates. When geologists find hydrocarbons migrating upward and reaching the seabed, it confirms the system is working. The source rock is generating, the hydrocarbons are moving. Before this survey, Jamaica had indirect indicators: onshore oil seeps, satellite-detected surface slicks, and seismic data showing large subsurface structures. All encouraging, none conclusive. The 2026 SGE survey went directly to the seabed and returned chemical proof. Confirming an active petroleum system does not mean commercial oil has been found, but it eliminates the most fundamental risk that there is nothing there at all. This result has been building for decades. Oil exploration in Jamaica started in 1955. Several early wells showed traces of hydrocarbons, not commercial quantities, but enough to confirm the geology held something. The government established the Petroleum Corporation of Jamaica in 1979 to formalize that pursuit. More wells followed in the early 1980s. Results were encouraging but inconclusive. The modern offshore phase began with Tullow Oil, which held the Walton-Morant license before exiting in 2020 during a corporate restructuring. United Oil and Gas took 100% of the license and has since invested over $39 million in seismic surveys that identified multiple large subsurface structures with potential. The geological signals had been accumulating for years. Multiple natural oil seeps were documented on and offshore Jamaica from 2015 onward, with live oil confirmed at the surface in 2019. An offshore slick near a location called Blower Rock was independently tested during Tullow's tenure and found to carry a thermogenic signature. The 2026 SGE survey was designed to take all of that and turn it into hard science. It did. Jamaica is not looking for oil in isolation. The broader Caribbean context is what makes this story genuinely significant. In 2015, ExxonMobil discovered oil in Guyana's offshore Stabroek block. By 2022, Guyana's GDP grew over 60% in a single year, the fastest of any country on Earth. By 2024, production reached roughly 616,000 barrels per day from a nation of fewer than 1 million people. Suriname, directly next door, is developing a multi-billion-dollar offshore project with first production targeted for 2028. These countries sit in the same Caribbean basin as Jamaica, shaped by the same ancient geological forces. United Oil and Gas have drawn a structural comparison between the Walton-Morant license and Guyana's Stabroek block. The 2026 SGE results give that comparison more credibility than it has ever had before. Energy Minister Darrell Vaz responded to this week's results directly. His words, "While I welcome the positive news, I'm cautiously optimistic because that was just to see if there were traces of oil and gas. We will not know definitively until we drill a well. That is the accurate position. Thermogenic hydrocarbons in seabed cores confirm the system is active. They do not confirm commercial volumes, depth, or recoverability. A well does. Drilling one well in this license area will cost between 60 and 70 million United States dollars, the minister's own figure. United Oil and Gas does not currently have that capital. The next step is securing a farm-in partner, a major oil company that funds part or all of the drilling cost in exchange for a share of the license. The SGE results, now formally on the record of the London Stock Exchange, significantly strengthen that conversation. United's current risk model puts the probability of a commercial discovery at around 1 in 5. With the SGE data fully integrated, the company expects that figure to improve. The 2026 results do not end the journey, they confirm it is worth continuing. If a well is drilled and confirms commercial oil, the impact on Jamaica would be significant, and it starts with a problem the country has right now. Jamaica imports over 90% of its total energy supply. The annual petroleum import bill runs between 1 and 2 billion US dollars in an economy with a total GDP of around 18 to 20 billion dollars. Every global oil price spike hits directly. Electricity costs rise, transport costs rise, foreign exchange pressure builds. Domestic oil production changes that. Revenue stays in the country. The import burden eases. The government gains an income stream it does not currently have. CEO Brian Larkin has estimated the production value of the Walton-Morant license at over US $23 billion across a 25-year production life, potentially doubling Jamaica's GDP. Those figures are speculative until a well is drilled, but they reflect the scale being discussed. For a real reference, Guyana's per capita income rose from roughly US $6,600 in 2019 to over US $21,000 by 2025 following offshore field development. Jamaica's reserves, if confirmed, may not match that scale, but the direction of impact would be the same. Oil finds do not come without complications. 3 risks stand out. Environmental. The Walton-Morant license covers ecologically sensitive Caribbean waters. Jamaica's south coast supports coral reefs, fishing communities, and the marine environment that underpins tourism, the country's largest foreign exchange earner. Any offshore operation that damages that environment could offset the economic gains from oil entirely. Price volatility. Deep water frontier development only makes sense above certain price thresholds. Oil markets shift fast. What is viable at $80 a barrel may not be at $50. Jamaica would be entering as a new producer with no existing infrastructure and no buffer. The resource curse. Countries that discover oil wealth without strong institutions have often seen inequality deepen and governance weaken. Venezuela is the nearest cautionary tale. Even Guyana faces questions about whether ordinary citizens are truly benefiting. Jamaica needs a sovereign wealth framework in place before a barrel is ever sold, not after. One more dimension worth addressing. Jamaica is pursuing this at a moment when global oil demand is expected to peak within this decade. Major economies are shifting toward renewables and electric transport. The risk of long-lived fossil fuel investments is rising. Jamaica's own national energy policy targets 50% renewable electricity by 2030. As of 2023, the country was at 12%. The gap is real. The strongest argument for developing Jamaican oil if commercial quantities are confirmed is not that it replaces the clean energy transition, but that it funds it. Production revenue could accelerate solar and wind investment, reduce public debt, and lower electricity costs for households while the global market for oil still exists. That window is real, and it will not stay open indefinitely. So, did Jamaica just find oil? Not commercially, not yet. No well has been drilled and no reserves have been confirmed. But what happened this week is the most significant development in Jamaica's offshore exploration history. Laboratory-confirmed thermogenic hydrocarbons from the seabed, an active petroleum system backed by hard science, a government that has acknowledged the results, and a drilling decision that now has stronger justification than ever before. The question for Jamaica is no longer whether there is reason to look. The question is, what happens when they do? Drop your thoughts below. Do you think Jamaica is ready for what comes next if oil is confirmed?